Hey, Adam Hooksema here from ProjectionHub, and in this video, I'm going to be walking you through the process of how to buy a lawn care or landscaping business with an SBA loan. And I'm going to be using a real life example of a client that I helped through the process all the way kind of from start to finish, from before they had even signed a LOI with the seller to finding an SBA lender to projections and business plan, going through the underwriting process and ultimately getting through to the closing process. I'm going to walk you through kind of step by step, and along the way provide you a bunch of free tools and templates that we've put together that I think are going to be helpful to you to help you through that process. So a little bit of my background: I was an SBA lender myself for 12 years, closed about 1,500 SBA loans, and now I own a company called ProjectionHub where we help folks create projections and business plans and walk through the SBA process. And in this video, we're particularly focused on this: how to acquire a lawn care landscaping type of service business. And there are some, you'll see in this case, this is kind of a unique case that was very, very seasonal in nature. So you'll see that graphically with some really big spikes in revenue in some months and very little revenue in other months. So just how to prepare for that, what you're going to need to do in terms of working capital and thinking through that with your SBA lender as well is going to be important. So with that, let me go ahead and kind of dive into the first step of the process, which is determining how much of an SBA loan can this business even qualify for. And that's going to be based on the historical financials of the business. So in this case, we use our acquisition projection template here that I've got pulled up, and we'll put a link to this in the description of the video below so you can kind of model out your own acquisition. But we're going to start with this historic data input tab. And so a lender is going to probably look at the last 3 years of historical tax returns. In this particular case, we only had 1 year of data available at the time that we were doing this initial analysis. And so what we did is we got the historical revenue from the tax return and the expenses. And this was a very small business. So they had about $62,900 in what's called seller's discretionary earnings. So the purchase price for this was, I believe, $120,000. So let's take a look here. The purchase price was $120,000, but we were looking for an SBA loan of actually $239,900 was what they ultimately applied for. So like double. So why did they need that? Well, they also needed to, the new buyer wanted to buy some new equipment. So the equipment from the seller was really kind of run to the ground, and they needed some new equipment, plus they needed some working capital. And so what we can see here is we had assumed $60,000 of new equipment. We assumed $19,900 in kind of SBA loan closing costs and guarantee fees, and then a $24,000 equity injection. And so based on this SBA loan amount at a 10-year term with a 10.25% interest rate, what we ended up having here was a annual proposed debt service of $38,443. So based on that loan, this would be your annual loan payments. And so what the lender is going to be looking for is they want to make sure that you have sufficient cash flow here, the seller's discretionary earnings, you have sufficient cash flow there to be able to cover the debt service. All right. So what we saw here was we had $1.64 of cash flow for every dollar of annual debt service, which is above kind of typically the minimum is 1.25. So you need to be at 1.25 or above on that debt service coverage ratio. And in this case, this was kind of unique because the new buyer had some outside kind of guaranteed income that really meant that they didn't have to take a salary from the business, which helped because there's not a whole lot here. There was not a whole lot of cash flow here, but because they kind of had their personal expenses taken care of through an outside source of income, that allowed them to really use all the earnings available here for debt service. So that was kind of the first step that we needed to go through and just make sure that, hey, does this even have a chance at qualifying for that large of a loan? And since it did, we were kind of then able to move on to say, okay, let's find an SBA lender to help with this. Now, this is a pretty small loan. Now, there's not a lot of SBA lenders that like doing loans under $350,000 is usually kind of the minimum I'm seeing right now that most national lenders want to stick with. But because it was an acquisition, we were able to find a lender who was comfortable doing a smaller loan. And so we work with that lender. And in this case, the buyer and seller basically just had a handshake deal. Typically, you're going to want to get the deal under what's called under LOI, a letter of intent, or basically under contract, where you and the seller have agreed upon the terms of the deal. And a lot of times you probably want to do that before trying to get a term sheet from a lender. In this case, we did things maybe a little bit the other way around. We kind of got the deal, got the financials that made sense, and then we went to the lender and said, hey, can you give us a term sheet for this? Which the term sheet from a lender is really just outlining the terms of the loan, how much they think they'd be able to lend, what the use of proceeds would be for, what kind of collateral you're going to need, who's going to need to personally guarantee the loan, and all of those things. So we were able to get a term sheet, and then we needed to then go back to the seller before it went to full underwriting. We needed to get the deal under contract. So helped the client put together a letter of intent, got the seller to agree to that and sign, moved on to underwriting. Underwriting was comfortable approving the loan. Now, something that was really unique about this, you'll see some seasonality here. So what we had in our model here, so, before we actually went to underwriting, we had to help create the rest of the projections and the business plan for this deal. And what you'll notice is that this is very seasonal in nature. So 22% of the annual revenue comes in February, 28% of the annual revenue in March. So this is actually kind of a unique, it's not really lawn care landscape. It was really more of a lawn fertilization, lawn spraying company. But the buyer was thinking of adding in some landscaping services, adding in some lawn care services, by using kind of this fertilization business. That was the existing business. That was kind of the baseline of what they're going to be doing. But what you'll see is that revenue is very, very seasonal. And so you can see that here on this graph, the spikes in revenue and then bringing that back down. So you need to really account for working capital because of that, because the clients were paying basically for the full year of spraying all upfront effectively. And then little bits of revenue would trickle in the rest of the year. So we help create the financial projections, and you're going to have to create some assumptions around revenue going forward, as well as expenses kind of on a line by line basis. You need to look at, hey, what were these expenses historically and what are they going to be going forward? So a lot of times what we're doing is saying, hey, historically the salary and wages line item was 15.73% of revenue. We assume it's going to be the same going forward, or we assume it's going to be different. And once you put all of the revenue and expense projections together, we kind of look here on this at a glance, and we're wanting to make sure that the debt service coverage ratio is still above that 1.25. And in this case, it was above 2. So we have the projections put together, and now we needed to put together a business plan. So we'll pull up just an example here of our acquisition business plan. So this is our acquisition business plan template. Again, this is free. We'll put a link in the description of the video below so you can use this and play around with it. But what you'll notice here, there's a lot here. And so you don't need to write a 30-page business plan. You could do something in 10 pages or less probably. The point of a acquisition business plan is to be able to say, hey, here we had a business that was already working, right? Presumably it was already profitable. Otherwise, it wouldn't cash flow. It wouldn't be able to pay the loan. It wouldn't qualify for an SBA loan if it wasn't already working. So we're saying, hey, this business was already working. And we just need to show the lender that we're not going to screw it up. Why we as the buyer, we're not going to screw it up. We're going to be able to keep profits at least where they are. And if not, hopefully grow them and expand them. And so we're talking about our industry experience. We're talking about our plan for transitioning customers from the seller to you as the new owner. If there's any key team members that you're going to be keeping on? What's the plan with them? How are you going to keep them? How are you going to retain the key talent? And those are the types of things that you're really going to focus on. And then, of course, you're going to focus on the financials as well. And so we kind of talk about our funding strategy here and get into the deal structure. All of that can be put into a written business plan, but you can do that, kind of as simply as you want, probably. Now, this was a pretty small acquisition. If you're looking to buy a $5 million business, yeah, you probably need a bit more detail. You need to really dive into the plan, and the lender's going to scrutinize the plan a lot more. On a small deal like this, I think short and sweet is good. That's our example business plan template. We've got the projection template, and then I kind of glossed over how we found a lender. In this case, it was a connection we already had. But if you don't have a good idea of where to find a lender, we do have this free SBA lender finder tool. I'm going to show you how to use it here. And so what we've done is taken the publicly available SBA loan data, and we got it into this format where you can sort and filter by a bunch of different variables. So you can look in the state. So let's say this particular deal was in Texas. So we'll sort by Texas. And then we can see which lenders have done the most loans in the state of Texas over the last roughly 5 years. And then we also can select change of ownership here. So change of ownership means it's an acquisition. And so again, we can see, Live Oak Banking Company, by far the top SBA lender in the state of Texas for acquisitions over this time period. Now, this is great. It's helpful to give you a list of lenders to reach out to, but there is a limitation here. It doesn't show you a name of a person. It doesn't show you contact information for how do I actually get in contact with somebody that's going to be helpful here? And so we do have this little button up here, Get Help. If you want an introduction to a lender, I offer a free SBA review here. You can fill out this form real quick, give me a little bit of context on your deal, and I'll review that. And if it looks like it's a good deal and I think I have a lender who could be a good fit, I can do a individualized introduction and help kind of connect the dots there. So if that would ever be helpful, just let me know. We'll put a link again in the description of the video below to this free SBA review, so you'll have that available as well. Okay, so now we have determined that the deal could cash flow. We've gotten a term sheet from the lender. We've gone under LOI or under contract with the seller. We have completed projections. We've completed a business plan, and we're gone into underwriting, and underwriting has beat us up a little bit, asked us a bunch of tough questions, but we got through that and they gave us a final approval. And then at that point, you get into the closing process. And so typically this is where all the I's need to be dotted, all the T's are crossed. This is where the lawyers all get involved. You're going to have a lawyer from the seller. You're going to have your own lawyer as a buyer. The bank's going to have a lawyer. And so the lawyers are going to all talk and probably rack up some billable time. And after a few big attorney bills, you're going to get to the point where you're going to be able to close on the deal. So typically I would say plan on 45 days from kind of official approval to closing on an acquisition. You're also going to have to, on certain size deals, you're going to have to get an appraisal of the business. This deal was small enough that was not required to get a formal third-party appraisal, but that is often a requirement. If it's over $350,000, I think is typically the number. If it's larger than that, you're going to need a formal third-party business valuation, and so that can cause a bit of delay. It can also potentially create some complications where we say, hey, we had agreed on this price, but the valuation came in too low. Potentially need to actually lower the dollar amount of the deal. So that is kind of that one last piece that, even after the bank officially approves the deal, if the valuation comes in too low, it may create a problem with the purchase price. Typically what happens at that point, you're probably going to have to just negotiate down that purchase price a bit to get it in line with the valuation that came back. So that is really the process. So I hope this has been helpful. I know there's a lot here. If you have a deal that you're taking a look at and just want some quick feedback, been doing this for over 15 years. And so happy to take a look at the deal, feel free to reach out to me at support@projectionhub.com or take advantage of that free SBA review and our other tools that we're going to make available here. So if you found the video to be helpful, make sure to like this video and subscribe to our channel, because I'm going to be putting out a lot more content similar to this on SBA loans, business planning, projections, acquisitions. And so make sure to follow along there, and we appreciate your support. Thanks.